right, traders, welcome to today's market recap. Another amazing day. We had a really wild session, and today we're going to be putting the spotlight on gold. Okay, now, why gold, right? Why would you want to pay attention to a boring market like gold, and why would you want to put gold on your watch list? Well, because of days like today. All right, I mean, just look at this textbook, guys. This was a textbook sell signal when the volume color band turned red at exactly 8 o'clock in the morning. Okay, so first things first, every single one of you guys and gals out there, you can trade gold. All right, here's how you do it. Okay, you can trade Forex gold, symbol is XAUUSD. You can trade gold futures. For all of you active futures traders, your symbol is GC. And of course, for those of you guys that like to trade gold stocks, gold ETFs, even options on gold, your symbol is GLD. Okay, so there's really no excuse. There's really no excuse for at least keeping your eye on gold because, look, man, the commodity sector has been on fire this year. Commodities like gold, oil, natural gas, they've just been hugely volatile, and you guys know what I'm going to say next. Volatility is a day trader's dream. It's your paradise. It's what you live for. Anyway, let's get into it. What you're seeing on the screen right now is a chart of gold, and this green and red color band that you see layered on to the gold chart is the volume indicator. And what this volume indicator does is it's really, really good at being able to identify potential trend changes. For example, when the trend changes from bearish into bullish, you're going to see the volume indicator print green. The band is going to turn green right over there. And this is your clue that the buyers are now in control. Makes sense? And of course, on the flip side, whenever you see the volume band turn red, like it did over here, what this is telling you, okay, what the market is trying to identify for you and give you a heads up on is that at this exact moment in time, the sellers are now in control, and it's possible that the trend has changed from bullish into bearish, and from 8 o'clock a.m. and after, it's probably a good idea to start thinking about looking for shorts. Make sense? And one of the reasons that I personally really like this volume indicator is because it keeps the chart clean like this. Okay, I will never ever show you a chart like this, and I feel that a majority of you out there have made no changes whatsoever to your trading style, right? This whole year, a large chunk of you guys have been trading these candlestick BS charts, and all you've done is waste your time. Think about that. You have wasted the entire year trying to look at candlesticks, Bollinger Bands, stochastic, whatever these indicators are here, these goofy looking lines, right? I mean, as far as I'm concerned, you just cannot beat a volume-based chart because, look, man, it's the volume that creates these moves, right? Why do you think there was such a huge rally to start today's morning session, and why do you think there was such a huge sell-off? Here's a hint. It ain't me and you that are creating these moves. It's the big guys. It's the hedge funds. It's the institutions, the guys that are trading serious size, aka volume, okay? And volume is something you'll never be able to properly identify on your candlestick garbage charts, all right? Anyway, so unless you were trading the overnight session, I think it would have been pretty hard to catch this long here on gold, but 8 o'clock in the morning when the volume indicator turns red, you better be at your computer, right? Because 8 a.m. is peak time. If you're not at your computer looking at the market, looking at charts, looking for setups at 8 o'clock in the morning, heck, even 7 o'clock in the morning is probably more ideal, right? If you tune in at 10:30, 11 a.m., you're just wasting your time, okay? Folks, I'm telling you, you can capture some incredible opportunities just in the morning session. 3 to 4 hours a day is literally all you need. Now look, you can trade the whole day, right? You can trade 8 hours, 9 hours, 10 hours a day, but I don't know why you'd want to, right? Anyway, let's zoom in here and let me show you guys two different ways that I think makes a lot of sense to participate and keep your risk very small while maximizing your potential gains. All right, we want to capture the largest amount of moves and gains and profits in the market while keeping our risk very, very small. So you guys see this down arrow here? Whenever the volume indicator changes from green into red, which happened at this exact moment in time here, two things are going to take place. Number one, you're going to get an alert on your speakers, right? And number two, a drawing object, which is this down arrow, is going to be immediately printed on the chart. And this down arrow here is your clue, it's your notification, it's your heads up that the volume has now shifted from the buyers being in control and directing the market action into the sellers now being in control and directing the market action. Okay, and what you would think about doing with that information is potentially opening up a short trade on the open of the next bar. Okay, and you see this white line that I just drew here on the high of the signal bar. All right, this white line is the appropriate, or what I would consider, logical area to place your stop loss. Okay, don't forget, guys, the stop losses are there for your protection. It's there to help you take the small loss as opposed to the big loss that so many of you guys have got caught on or flat-footed on, right? This alone, guys, is the number one reason I think all you guys are blowing out accounts. I mean, let's just keep it real, right? You're either not using logical areas on placing your stops, and you're placing your stops randomly on your candlestick charts, right? Or some of you guys aren't using stops at all, which to me is crazy, right? Anyway, so this is just what I would consider a textbook setup. It really doesn't get much better than this. Here's the signal. Here's the potential entry, and here is the logical area to place your stop. Makes sense? And if we zoom this bad boy out and we see how this trade played out, well, you guys already know how this trade played out, right? It was a shocking almost 300 pips and or ticks, depending on if you're trading futures or Forex. I mean, this was it, man. If you missed, right? If you missed this signal, and this is going to happen very frequently, guys, right? You got to be at the computer. You got to be looking for setups. If you missed this setup, you didn't get anything, right? You were just on the sidelines today watching everybody else make money shorting gold, or you were probably losing money on your candlesticks and your nonsense and your stochastics, right? So that's why I really like the visual representation of this chart. You know what I mean? It's not a stressful chart. This chart doesn't give me any anxiety, right? It's a pleasure to look at these charts as opposed to other charts like candlestick charts and whatnot, which really stress me out. Okay, I don't want to be stressed and having to make buying and selling decisions on a stressful chart like this. Okay, I want to be able to look at a chart and within 5 seconds I need to figure out what do my entries look like and what's my potential risk on the trade. Now, one more thing I'm going to show you guys. What I just outlined here for you is the aggressive method or style of trading volume, meaning that whenever the color shifts, boom, you're in that trade and you don't look back. But there is a use case to be made, and I think you might have seen some of the videos previously that I posted on being a little bit more conservative with your trading. And what that means is you wait for some type of retracement. And guys, all a retracement is, okay, is the opposing color based on the volume. So if the volume band is red, a retracement would look like this: a bunch of green bars that end in a big red reversal bar. Makes sense? Stop me if this is too confusing, guys. All right, let me know. Post a comment in the chat below. Let me know if this is too confusing, but I don't think it is. This is literally the definition of a retracement trade, right? Number one, you need to be able to identify the direction. And this volume indicator told us that the direction was bearish, right? We're looking to be sellers, not buyers. And if you decide that you want to be a more conservative trader and you want to look for, even more higher probability setups, while recognizing that sometimes you might be a little bit late to the party, and that's okay, right? Then what you could do is do something like this, which is wait for the color change, wait for a nice deep retracement, and then boom, when this bar shows up like it did right here, then and only then do you think about taking a short trade. And there was also another retracement right here, right? Isn't that interesting? 2 retracement trades on the same leg, the same direction, right? I haven't really seen that too many. In fact, this is actually 3. There's 3 if you count this retracement right over here on the long side. Isn't that interesting? I think retracements show up on every market. I think if you know what you're doing and you have the right trading software and the right trading indicators on your charts, and really just a professional mindset, you know what I mean? I don't consider these charts here to be a professional mindset. I consider this to be a giant waste of time, okay? And for obvious reasons, right? Because this professional chart here does 1,000 times better of a job at helping you, number one, identify the direction, but also more importantly, you know, where to look for very low risk, high probability setups. And in fact, you can see right here, if you decided to take this retracement opportunity instead of the aggressive opportunity all the way up here, right? You were a little bit late to the party if you took this retracement, but it still ripped for another 100, maybe 120 pips and or ticks just in a couple of hours. So if you really like this volume indicator and you want to use it, at least now you know why it's totally worth your time to be keeping your eye on gold. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.